Great day and welcome to Logic Lives. Today we're going to talk about investing. If you are new to investing, you don't know about the stock market, you have no idea of how to start, this will be the video for you. And so most people hear the term invest for your future. Most people know that successful people in terms of wealth are the ones that invest. Usually they hear of real estate. They know the stock market, but it's just very complicated and people are scared because they don't know the basics of what to do in terms of investing in the stock market. And they feel that it's risky because you hear these headline stories about the stock market crashing and everyone losing their money. And I can tell you that's far from the truth. If you want to make yourself wealthy and comfortable in the future and leave something for the rest of your family and create a high net worth as far as your family tree going forward, you need to invest. And so, why? I just advised you because of the fact that it's going to be the safest way to increase your money over time. 150 years, the stock market has been around, and in that 100, maybe it's 130, I can't advise for sure, but since the stock market's inception, you will see that the average rate of return is 10%, even if factoring all the crashes. So those crashes happen every so often, maybe once every 20, 30 years, where the stock market goes down 50%. So your value of your stocks goes down 50%, but it goes back up on average 10% a year throughout the course of the stock market. When you think about how do you purchase stocks? The easiest way that you can purchase stocks is if you have a large bank that you bank with, you can look and see if you have an option to create a brokerage account. And that will start allowing you the opportunity to purchase stocks. Should be free, and you purchasing stocks should be free as well. If you don't have a large bank or you don't have a bank that offers a brokerage account, you can sign up for some of the ones that you hear of often, like Robinhood, Webull, things of that nature, where they'll allow you to link your account to theirs in order to purchase stocks. Next piece is what you should be investing in or what you should be purchasing. You have a lot of different options when it comes to the stock market. You could purchase individual stocks. You could purchase a group of stocks called an index, or you can pretty much purchase the stock market itself, and that's also an index, but it just takes every company within a certain portfolio and contributes your money equally amongst those stocks or those companies. And so when you think about investing, you will see that it's really about what you feel comfortable with. And if you want to invest in individual stocks as a beginner, I would really caution you to making sure that you understand your investment. And the simplest way to understand your investment is to think about the products and services that you currently use. And if you feel that those are really great, instead of just purchasing it, you can become an owner, because owning a stock is making you an owner of that company. You might be a small owner based on how much stock you have in it, but you're still an owner of that company. So if you really enjoy Apple products, you can purchase Apple products and you're making Apple money based on purchasing it. Instead of just purchasing it, I would suggest, if that's an individual stock that you want to own, purchasing the stock, because you're owning a little bit of that business because you feel that that product is something that's reliable, valuable, and is going to increase over time. Coca-Cola is a great example. McDonald's, Chipotle, Amazon, Microsoft, American Express, all of these companies you can potentially own a little bit based off of purchasing a stock. Again, I strongly consider you to do an index if you are starting out, because it's a lot safer. And on time, as I said, the stock market gives you 10% per year. So if you invest in an index that gives you every company within the stock market, you're going to average 10% a year, just like the stock market does. There's a couple of indexes that track the stock market. The one that is considered moving with the stock market is called the S&P 500. Standard and Poor's 500 largest companies in America. And so if you think about the largest companies in America, it's pretty safe because they're large for a reason. And if you invest your money in there, you're going to have an average return of 10% go forward if history simulates itself. Let's say repeats itself, but history doesn't repeat, it just rhymes, is what I've heard before, and it makes a lot of sense. So a way to invest in that stock market is investing in the S&P 500. You also have the Nasdaq 100, which is the 100 largest companies. If you want to invest in those, go to your brokerage account and find the ticker symbol. Ticker symbol for the Nasdaq, you can type it in and you'll see Nasdaq. I know the ticker symbol for S&P 500, and that's SPY. And based off of you purchasing the SPY, you now have one stock or one share of the entire stock market. And that's something that you'll feel more comfortable with because you know the stock market is going to average a rate of return of 10%. Doesn't mean it's always going to be 10% every year. It might go down 20% one year. You might have a crash and it goes down 40%. But over time, if you leave your money in there, which you should, because it's a long-term play for investing, it's not short-term. If you leave your money in there for the long term, you'll see an average rate of return of 10% per year. So invest and make sure that you keep your funds in there. Don't get scared when it goes down. Don't make that mistake which most people do, and that's to take their money out when it's at its lowest. You want to buy more at the low because you know it's going to eventually go back up. 10% rate of return every year. Hopefully you learned a little something. If you did, make sure you like and subscribe.